The South Korean stock market is currently closed for the week, and following the final trading bell on Friday, July 3, 2026, SK Hynix Inc. finished the session at a price of 2,425,000 South Korean won. This marks a massive single-day surge of 10.88%, with the stock climbing 238,000 won from its previous close on a trading volume that approached 8 million shares. While most market participants look at this dramatic swing as a simple reaction to broader semiconductor momentum, the underlying reality is far more compelling. The company is actively preparing a monumental $29 billion initial public offering in the United States via American Depositary Receipts, scheduled for July 10, 2026. This massive move is designed to transition the company from a regional powerhouse into a direct target for Western institutional capital, completely altering the global capital flows that typically dictate the valuation of large technology firms. If you are tracking the movements of major global names like Nvidia stock, Apple stock, or even Tesla stock, understanding the trajectory of this chip manufacturer is no longer optional. The market narrative suggests that domestic hardware providers are simply riding the coattails of big technology brands, but the truth is that these foreign suppliers are the gatekeepers of the necessary hardware components that keep the entire artificial intelligence infrastructure functional. This creates a distinct tension between market expectation and structural reality. The common expectation among retail investors utilizing modern investing sites or an individual brokerage account is that memory component production remains a highly cyclical, low-margin business defined by the traditional boom and bust patterns of personal computers and mobile phones. People assume that because hardware components eventually become commoditized, no single supplier can maintain long-term pricing power. The reality is that high-bandwidth memory has fundamentally changed the operational physics of data centers and server architectures. High-bandwidth memory is not a commoditized piece of silicon. It is a highly integrated, complex architectural component that requires precise engineering and custom manufacturing partnerships. Because SK Hynix holds a dominant position in supplying these specialized components, its relationship with major processing designers is much more deeply integrated than past component supplier agreements. Investors who manage their assets independently through self-investing methods or automated platforms like Schwab Intelligent Portfolios often overlook how localized geographical monopolies can dictate the profit margins of Silicon Valley giants. When you look past the standard headlines, the real story centers on a company that has managed to position itself as a primary structural bottleneck for high-performance computing worldwide. The recent trading patterns of this stock reflect this high-stakes environment. Just a session prior to this massive upward movement, the stock experienced a sharp drop of over 14%, highlighting the intense volatility and program-driven institutional activity currently defining the South Korean market. Large global funds are adjusting their exposures rapidly, balancing their domestic positions with the upcoming Western listing. For active market participants using interactive brokers trading systems or monitoring institutional flow through advanced interactive brokers platform tools, the high daily trading volumes indicate significant accumulation by long-term asset managers. These funds are looking past the short-term currency fluctuations between the South Korean won and the United States dollar to focus on the massive long-term demand curve for high-performance server hardware. This level of institutional interest often changes how retail investors view self-directed asset placement. Many individuals seeking comprehensive investment help are moving away from passive index tracking towards concentrated positions in critical infrastructure suppliers. Whether someone is using the Robinhood app for fractional shares or executing larger trades through a Fidelity brokerage account, the global nature of this semiconductor supply bottleneck is forcing a complete reevaluation of portfolio risk and geographical asset distribution. The sheer scale of capital expenditure required to stay competitive in this space is staggering and creates a high barrier to entry that insulates the top market players. SK Hynix, alongside its primary domestic competitor, is participating in a massive capital expansion plan valued at over $500 billion to build new fabrication facilities and secure next-generation manufacturing tools. This aggressive building phase has created noticeable strain on global chip-making tool supply chains, indirectly placing pressure on other foundry networks and traditional logic chip builders. For individuals involved in online investment or building long-term wealth via a SoFi robo-advisor, this massive capital investment signals a prolonged commitment to maintaining technological dominance. When a firm invests hundreds of billions into localized infrastructure, it changes the entire economics of the sector, making it nearly impossible for smaller, underfunded competitors to catch up. This dynamics can be tracked clearly across various online investing platforms, where sector concentration is becoming a preferred strategy for growth-oriented portfolios. Those who track global technology trends through specialized fidelity ETFs or maintain active positions within a Robinhood crypto and equity balance are increasingly recognizing that physical industrial capacity is becoming just as valuable as software algorithms. To understand how the company reached this point of supply dominance, it helps to examine its historical business model and core operational focus. Originally established as Hyundai Electronics before undergoing significant restructuring and eventually joining the SK Group, the firm has spent decades refining its manufacturing processes for dynamic random access memory and flash storage. In previous years, the business was highly vulnerable to global consumer electronic demand cycles, frequently experiencing severe profit margin compression whenever smartphone or personal computer sales slowed globally. Older financial reports from previous decades show a company that had to carefully manage high debt loads and volatile cash flows just to maintain its expensive fabrication facilities. However, by shifting its primary engineering focus towards high-performance computing applications and developing early iterations of stacked memory technologies, the company successfully anticipated the shift towards data-intensive server infrastructures. Today, its primary business model centers on producing highly specialized, high-density storage configurations that are directly integrated into complex computing units, moving away from simple standalone components towards deeply integrated system architecture partnerships. Looking forward, the future outlook for the stock presents a complex set of potential catalysts and structural challenges. The upcoming listing on the Western markets on July 10th represents a major immediate catalyst that could unlock significant liquidity and expose the company to a wider base of global asset managers who utilize specialized fidelity trading platform options or robust interactive brokers' fee structures to optimize their international exposure. However, this global integration also introduces notable systemic risks. The industry is highly sensitive to geopolitical shifts, trade regulations, and potential restrictions on the export of advanced computing equipment. Furthermore, the massive capital expenditure plans require sustained high market demand to justify the investment. Any unexpected slowdown in the adoption of large-scale computing infrastructure could lead to oversupply conditions in the memory markets, causing rapid adjustments to pricing power. Investors monitoring their long-term growth through modern tools like SoFi Investing or traditional Fidelity IRAs must balance the high growth potential of this chip supplier against the cyclical risks inherent to massive hardware manufacturing operations. Comment below how many shares of SK Hynix you currently hold or if you plan to buy the upcoming US listing next week. It is always interesting to see how global traders choose to allocate their capital when a major foreign asset transitions to a domestic exchange. As we look at the broader picture, the contrast between expectations and reality remains the defining characteristic of this market valuation. While the general market narrative frequently labels hardware component manufacturing as a volatile, cyclical trade, the structural reality demonstrates that the company has established a highly integrated position in the global computing infrastructure. The massive single-day gain to 2,425,000 won following a period of intense institutional volatility shows that the market is actively repricing the value of physical production capabilities. For individuals managing their long-term wealth through platforms like Robinhood Investments, SoFi Active Investing, or sophisticated Fidelity wealth management strategies, the transition of this semiconductor giant into Western capital markets represents a significant structural shift in the technology sector, balancing the immense growth potential driven by next-generation computing demand against the real risks of capital overextension and geopolitical pressure will be essential for anyone looking to navigate this evolving investment landscape. For market participants who focus heavily on tech infrastructure, the relationship between component suppliers and primary designers has rewritten the traditional rules of corporate valuation. Historically, companies that designed the final product held all the leverage, while the firms manufacturing the internal components were forced to accept lower margins and high operational risks. The current layout of the chip market